This is a lecture from Open Tuition. To benefit from the lecture, you should download the free lecture notes from opentuition.com.
This chapter deals with the tax-adjusted losses for companies. Now, losses we have already dealt with. If you're watching these in chronological order, we've already dealt with losses for individuals, and you will see there's quite a lot of commonality between the two. But however, there are some significant differences for limited companies. So although it might be important to watch the income tax loss position to give you an idea of how losses work, this is a standalone chapter because some of the changes and the pro forma and things need to be slightly different. So if you do make a loss, now that could be an adjusted profit less capital allowances makes a loss, or an adjusted loss and capital allowances makes the loss bigger. Again, use the same pro formas. Then in the computation itself, you will say nil. Now, these are the main rules for loss relief. A loss may be relieved against current period, against TTP. Now, that you have to do. You must do a current year claim before 12-month carry back to an earlier period or periods. There might be two of them. Or carried forward to relieve against any part of future total profits. It's all against total profits for trading losses. The other rules are different for gains and for properties. Carry forward, that's what's known as the default position. If you do nothing, that's what will happen. And it says there's a note there, important. If a company wishes to carry back a loss, then it must firstly use the loss in the current period. And unlike within the carry forward claim, partial claims are not allowed in either the current year or the carry back. So, the introduction of a two-tier CT system, the most important factor to take into account when considering loss relief claims will be the rate of which tax is going to be relieved. Also, groups will become more important again, and there's a chapter on that for you to have a look at. Less important factors are cash flow, relief at the earliest available opportunity, and or wasting any QCDs, depending on how many the client makes. Two important considerations for this exam. And again, this information has come from ACCA. Any claims made after total profits prior to 1st of April will only obtain relief at 19%, which might be important for a carry back claim. So a carry forward claim might be more important because you're going to get relief maybe at 25% depending. Current and prior year loss relief claims against total profits cannot be restricted. They're all or nothing claims. Therefore, there is therefore more flexibility when it comes to group relief claims and losses against future total profits. So let's have a look how that looks in this illustration. So for the year ended 31st of March 2024, ACCA Limited made trading losses of 120,000. It has no associated companies, which means the limits are not prorated, and no dividends, so we're not having to do. So there's no pro rata of upper and lower limits. No dividends means we don't have to do augmented profits. They're not going to give you dividends, augmented profits, associated companies, short period of account, and losses. They're going to divide the topics up. Now, you might get associated companies with dividends, or you might get associated companies with small lengths of time, which is what we had in one of the examples in the earlier chapters. But you're not going to get all of them in one question, because that's too complicated. And obviously it makes the chance of you not getting it right higher. What they're trying to test is your ability to put these rules into practice. And at this level, they'll probably do 1 or 2 rules together, or 1 rule here, 1 rule there. They're never going to put 5 rules in one question. That's going to come up at ATAX. So these are our year ended. 23 we made a profit of 260,000. 24 we made a profit of 80,000. And 25 we made a potential profit of 350,000. So that means that if we have a trading loss here in this year, this must be other income. So although ACCA Limited has augmented profits between 50 and 250,000 for the year ended March 24, which is the financial year 23, the overall rate of tax will actually be less than 25% because of marginal relief. Any claim to offset the trading loss in the current year would be an all or nothing claim against that. Also, extending the loss claim to the previous year, which we could do, will give us a rate of 19% return. However, a carry forward claim would save the following corporation tax. So therefore we have the profits which are at this stage forecast, which means we run the risk that it might not actually be, less the losses which we have brought forward, TTP of 230,000. Tax at 25% and marginal relief of £300, giving us a tax of 57,200. Now, at the full rate, if we had not put that in, they would have paid that amount of tax. Therefore, we have saved, we would have paid that amount of tax. Therefore, we would have saved, because obviously we only paid 57,000, we saved 30,300. So it might be worth doing a little calculation. If we do, if we don't, to work that out for yourself. Now, very often in these exam questions with losses, as with individuals, there's normally a hint as to how things will go. And the hint here is the fact that this will wipe that out, which means we pay no tax. That's a 19% claim, and this is a 25% claim plus marginal relief. Now the hint therefore is this one is definitely going to give us more relief. So just be aware of what they're asking you. Think outside the box, so to speak. We have also potentially some 2 types of other losses, which are non-trade losses, which are property and capital. They're quite common in exam. Particularly the gains. Whoops, I've got too many M's and not enough N's. Too many N's and not enough M's. That one is always against capital losses. So capital losses only relieved against gains. Capital stick together. Okay, you cannot have that relief against anything else. So if in your computation there is a capital gain and some losses, deal with that inner working first, because you know that they stick together. And you can then put the net figure or the answer into your computation after you've copied the question into your answer. Property losses. They can be set against total profits before QCDs in the current period. That's automatic. You can't have a partial claim. It's all or nothing. And that balances out the fairness. The fact that you have a property loss and you can have it against other income is a bonus. That's a plus. But the minus is that you've got to do it all or nothing, which means you could waste your QCDs. Carry them forward against future total profits, or you can group relieve them. So let's have a look at how that looks in example number 1. So Avanti has the following results for the 31st of March 2024. We made trade losses. We also made some capital losses. We have interest receivable, which will go under the non-trade loan relationship rules, a gain and a QCD. And we have trade losses brought forward of 40,000. That's all our information. Calculate the TTP for Avanti for the year ended 31st of March 2024, assuming it wants to use its losses as soon as possible. That's your hint. To the extent it is beneficial. Stating, if relevant, the amount of loss carried forward. And if you've seen the income tax chapter, you will see that we need a loss memorandum in all of our losses questions. So I'm going to show you the model answer for this one so that you can see, I can explain then exactly what is going on. So here we have our model answer. Again, a nice heading, well labelled. We have basically, this is the pro forma. Use the question to lay out your answer in the correct order that the question is. This is what a model answer will look like. Make your answer look as similar to the model answers. So when you're doing the questions in your BPP manual and in your exam kit, try hard to make your answers look like the model answers. So the examiner doesn't have to, the marker doesn't have to fight to find your answers. Make it simple for him. It gives him confidence that you know what you're doing. So we've copied out trade income, property income, interest receivable gains, giving us total profits. Then we've left some space. This would be blank space in reality if we were writing this out. And then you put in your QCDs as you would do. Okay, so these are nil, right 0, all right nil. Okay, no pence. You've copied that, giving us profits of 99,000. Okay. We've also then set up a pro forma, a loss memorandum, which is so important. And we deal with the brought forward losses first. Okay, that was the 40,000. Okay, that was the 40,000. And we have current year losses. Current year losses. Now, what I would have done is I would have actually kind of added these, put these in together, and then kind of decided what I needed to do. Because we have a bit of a twist in this question. Do you remember that were property losses? Property losses can only go forward, whereas trade losses can go back. So it is important that we use our, if you have trade losses, property losses, gains and losses, obviously these two stick together, so we can get rid of that one. If you've got property losses and income losses from your trade, use your property losses first, because the only way after that is forwards. So you see that we've added that in there. That has reduced the profits down considerably. Now, this loss brought forward, we can do a partial claim. So what I've done there is I have restricted it. Now that's the loss brought forward of 40,000. You see there? And I've restricted it, and I've restricted it for one reason. We have a QCD. That has no longer wasted, which is brilliant. So our TTP is nil at the end of the day. So having restricted that loss, I still have a balance of that, plus our current year, which we've not used, so we can either take it back or we can take it forward. And the notes at the end say the property losses are automatically offset against total profits before trade losses, therefore they are all relieved, and the partial claim can be made to offset the trade loss brought forward to avoid wasting the QCDs. Okay, so let's go back and have a look at example number 2. So in example number 2, Snake Limited has the following results. Now, this pro forma that we have in the question here is the one that's going to turn up in the model answer. Okay, and again, make sure you copy the years correctly across the top. So you can do that. You can then put in that trade profit, you write nil for that trade profit. Property income, that's a nil. You can copy that, you can copy that, you can copy that. Gains, copy that. Leave that, that's a nil. Now, be careful. What happens with chargeable gains? You remember? They stick together, which means you would carry that forward and wipe that out, so that would also be nil. And then there's 1,000 to carry forward, so that would be 4. Now, if you can remember to do that, that's fantastic. Don't just make a note of that in the question. Make sure you show that very clearly in your answer, because that is the rule. Capital gains and losses are only offset against each other. They are only carried forward and used immediately, and that's what you've done there. 2 marks you'll get for that, so make sure that you do it properly. Then you can put the QCDs in. I would always put them in. Write the whole pro forma out, put them in, subtotal it, leave blank spaces for the losses. So important to do that, because you're going to get half a mark for doing that, half a mark for doing that, half a mark for doing that, and 1 mark for that. 2.5, maybe 3 marks for setting the pro forma out exactly as the examiner wants it to look. So how does that look? Let's have a look. So what we have here is the perfect model answer. Set the years across the top, the pro forma down the side. So we put all of it in to there, and I said then to leave a gap and put your QCDs in. Now, if you put all the QCDs in, and this is a section C question, you write all those QCDs in. If they are not needed, because you're doing this on a spreadsheet, you can remove those 2 and write wasted in, because that's the technical term for not using them. Okay, don't put nil, write wasted. You obviously won't be able to cross through on the spreadsheet, so remove them. Okay, you'll get an extra half a mark for that. So having copied everything across, we now need to set up some loss memorandums. Now, one thing, do you remember we did that in the question? We copied that one. There was 12 here. That we took across to the 11 and wiped that out. That we took across to there and reduced that. So if we go down here, you will see there the capital loss has been dealt with. And we have a loss memorandum here for the trade loss that we need to deal with. Property losses are always dealt with first. So in the current year, that property loss would be added in. Now, our trade loss was in this year. Therefore, we can only go back that year, which means we can then finish off that. Now, if you don't want to finish it off yet, you want to make sure you've got everything in, not a problem. This is done on a spreadsheet. You can always delete this cell and rewrite it. So let's have a look at the trade loss situation. Now, they said they wanted it relieving as soon as possible. So it must firstly be set off against total profits in the current accounting period and then carried back and offset against those in the previous 12 months. And the balance is then carried forward. So we write in our loss memorandum. So that's from the question. Let's go back. We've got £500,000 to pray for. Okay, play with that. We're going to write that off in full so we don't pay any tax in the current year, which means that our cash flow is better. We've used it as soon as possible, which is what the client wanted. We deduct. Then we are going to carry it back to here and wipe that out. And again, that is nil. Put it in our loss memorandum. Now, at that point, it might well be worth doing a subtotal, just to make sure you've got how many you've got left. And then this is the carried forward. So that's, sometimes you can do current year, carry back, carry forward. That might be worth, and there's nothing to carry forward. Okay, after that, because we've utilized it in full. So that's the maximum we have left. And then we can obviously finish off those questions.